While hundreds of entrepreneurs and tech investors flocked to Lowenstein Sandler's Venture Crush earlier this month, Trinity Ventures general partner Dan Scholnick was one of them. He told me that starting out as an entrepreneur has made him a better investor.
As an entrepreneur, it's nice to know that the person on your board understands the pain you're going through, because being an entrepreneur and starting a company is really like going on a roller coaster ride.
So, Dan, speaking of roller coaster ride, a lot of the investments that you're making now have to do with cloud. So we talk about it a lot, but what is the most exciting application, idea? What do you see in cloud that you say, okay, this is really a game changer?
Well, the obvious answer for me is actually one of my portfolio companies, Docker, which just on Tuesday announced a $95 million round. We've compared the growth and adoption of Docker to other enterprise infrastructure technologies, and it is off the charts. No enterprise infrastructure technology has gotten reach into both small companies and the Fortune 500 as quickly as Docker has, even the most successful enterprise technology.
When you talk about rates of change, it sounds like you're saying this field is changing faster than almost any other enterprise field.
That's exactly right. It's unlike anything we've ever seen before. Typically what you see in these markets is that the early adopters of these technologies are startups, and then over time, a number of years, you start to see large enterprises adopting these technologies. In the case of Docker, everybody's adopting it all at once. It's very unusual.
As an investor, what does it mean to you that more and more traditional companies are investing? And by that I mean T. Rowe Price and Fidelity, especially in enterprise. What's your take on that?
Well, it's certainly changed the nature of the growth equity market, and it's what's driving high valuations and larger round sizes. I think what's the big outstanding question that I don't have an answer to is this going to be a long-term trend? In most cycles, what you see is in the up part of the cycle, new types of investors jump into the market, but their commitment to it is only skin deep. And we'll see what happens over time when we get into the next cycle.
Is this money coming in, even from hedge funds or private equity firms as well? Is this a sign of a bubble?
I think it is. I think the fact that all this money is coming in and we're seeing valuations in the private markets that are much higher than companies would get on the public markets, that's a warning signal that says to me that we're in a bubble, yes.
So do you see pockets? Because I'm assuming every aspect of tech is so different. So maybe there's a few that are frothy, and there's a few where the valuations are justified. Where do you make the distinction?
Oh, I mean, it's just a market-by-market analysis. We are very bullish on the ad tech sector, for example, but the public markets and the private markets don't really like ad tech right now. So we think there's enormous opportunity in that segment, and it's a great time for investors to be getting into that segment because valuations are low. But if you go to cloud computing or consumer internet, valuations are very high, and we see strong signs of a bubble in those markets.
Dan Scholnick, Trinity Ventures general partners. We'll be right back.